Another trade idea that we have is the Euro Australian dollar. Now, it's not really our A plus setup fundamentally. We are not, we are actually going to enter half of um position sizing that we would have used if this was our A plus setup fundamentally. But fundamentally, the general idea is that the European Central Bank is seen as one of the first central banks to to cut rates, and the Australian Central Bank is seen as one of the last central banks to be cutting rates. Now, that is a divergence. We've got the Europe cutting first and Australia being one of the last to cut rates. And we know that the effects of rate cuts to a currency is currency depreciation. And then what we have then is we are looking for sell trades, selling the euro against the Australian dollar. And what we have to notice is that earlier tomorrow morning around 4 a.m. at this time is 11 p.m. It's 11:15. And then we know that tomorrow at around 4 a.m. we'll be having interest rate decision. Now, technically, then what we had is that we had the market was in a downtrend or in a bearish trend. Let me just remove this and then we do a top-down analysis on this chart. So we've got a bearish move and then we've got a move to the upside. Now, when this move to the upside happens, what we have to ask ourselves is this: is that are people buying the euro against the Australian dollar, or are they just taking profit from the euro AUD? But either way, we then had the market move to the upside and initiating our other level of supply here. And then we've got a move to the downside. Now, what we realize then is that on the daily, we are still in our bearish trend. So this was a pullback of this entire move because the market moves in waves. So we don't see a linear move, but we've got to expect waves. So we've got to move to the downside and then the market pulls back, and then after this pullback, I think this pullback was more than 50% fib retracement, meaning that euro Australian dollar, as it was here, it came back to it was in fair value here, and then it became, oh come on, this was fair value, which is 50%, meaning that there is an agreement between buyers and sellers. And then as the market moves to the upside, we then find the euro being cheaper, and then sellers came into the market. But now with where we are currently, we know that we are then in a bearish market. And what are we anticipating then? We go then to the 4 hourly, and then what we can see is that the market initiated a high, a swing high, and then the market pulled back and then created a low here. And then in this structure, what we can see is that we've got multiple levels of support and resistance. And we know that traders use support and resistance to initiate their trades. So we have got support here, as you can see, and then we've got resistance here. We've got resistance here. We've got resistance here. And then we've got a break out of that zone. Now, as this happens, what do you think traders are doing? Breakout traders are buying the breakout of the support and resistance structure. So when this happens, we know that there are traders that are buying into this market, and then the market moves the reasonable number of pips above the zone, and then the market closed the reasonable pips below the zone. Now, this was a good A plus setup that we should have caught, but I wasn't near my charts when this played out. This is a stop hunt trade. Now, when the market moves back into the zone, then we are expecting, we know that there are basic psychological principles that govern trading, and financial institutions take advantage of these concepts, and they really take a lot of advantage. Now, what do you think is happening for these traders here? There are traders that are putting in buy trades in and around this zone as the market is moving to the downside after the breakout of the support and resistance structure. So as the market is moving to the downside, to the upside, we've got traders that are putting buy trades. And when the market retraces to come and test this zone on the lower time frame, we've got traders that are putting in buy trades, more buy trades. And then let's go there and see how these traders were trading, right? Remember that at that point, we are sitting on our hands. Sorry about that. When all this happens, we are sitting on our hands. Let me remove that. Awesome. You see that as the market came back into the zone, let me get rid of these drawings here. Manji, where's the delete button? There we go. And also get rid of you. There we go. All right. So this is what's happening here. As the market is pulling back to this zone that it broke out from, we've got market participants anticipating that the market is going to continue to rally to the upside after this move, right? And then the market surprises them. Now, there are a few things that traders suffer from. Traders suffer from loss aversion, meaning that wins feel better than losses, So as the market is moving in the opposite direction, because we've got buyers here, right? So we've got a lot of buying taking place here, right? Now, as the market moves in the opposite direction, we've got traders moving and removing their stop losses, right? Because now it seems as if the trade is going against them, and then we've got traders having hope that no, price action will come in and the market will move to the upside, and the market keeps on going against them, and they keep on moving and removing their stop losses. And there are even professional traders who do that. I mean, even you and I can testify to that we've at one point in our life suffered from loss aversion, right? And you've got traders that are over leveraging their accounts, and then they see that they are now 50%, they're experiencing a 50% drawdown and even more than that. So we know that there are traders that are caught in their buy position here, right? There are traders that are still in these positions. Now, which one is a better trade? If you are in a trade and then it becomes a losing trade, the next better trade to take is a break even. So these traders that are caught in these positions here will want to break even out of their trade or out of their losing trade. So there are traders that will be closing their sell trades. Actually, they are buy trades here. And remember that when you are in a buy trade and when you are in a buy trade and you close it, it automatically becomes a sell order. And then we have got a lot of selling taking place here, right? So as the market comes back to revisit this zone, we've got people that are closing their sell positions, and we know that the market found the euro being very expensive against the Australian dollar here. So we expect the market to continue to move to the downside from this zone in our chart. So this is the trade idea that we have. We are expecting the market only if, and only provided that the Central Bank of Australia comes out and they're saying they are not going to cut interest rates, but rather they are going to hold interest rates. Therefore, we will anticipate the market to then continue the move to the downside. So that is it for this chart. Let's move on to the next chart.